Of the session down today. I mean, is it still concerns over the US fiscal cliff, or is it things closer to home?
James, usually on Monday we do see a light trading day, so anything above that $3 billion mark is above average for a Monday on the Australian share market. But I guess adding to that picture, we do have the US bond markets closed today for the US version of our Remembrance Day. So if we have a look at the market, down by 0.3%, there were some positives to take away on the market today. If we have a look at some of those stocks which reached 52-week highs, we saw Cash Converters, the specialty fashion house, as well as Flexi Group. Now, all three of these stocks are somewhat in that retail discretionary space. And in fact, the retail discretionary space doing well today. The discretionary sector was up by 0.1%, which was only 1 out of 3 sectors to actually make gains today. So it was good to see a bit of support for that discretionary space, which has been sold down so heavily over the past year. I guess on the downside, though, we did see Paladin reaching a 52-week low. Now, the stock was down by 2.5%. It did come out with a first quarter loss of $46 million US, so not good news there. And of course, we saw a lot of bad news on the Australian share market today. Downgrades probably flowing through for the likes of Incitec Pivot, QBE Insurance, as well as Orica, which were all sold off heavily. We saw some bad news for the likes of BlueScope Steel, Linus coming back online after its capital raising, Oil Search and Santos. So it was once again a day for those defensives to shine, and we did see quite a bit of support for the banks earlier on, although by the end of the session it was only CBA and Westpac trading higher. We also saw the utilities and the telecom space doing well, but our market holding up fairly well given that we had to battle with a pretty soft lead coming through from the US and also some economic data around the region. We saw Japanese third quarter GDP contracting by 0.9%. A lot of economists now predicting 2 quarters of negative economic growth, so a recession in Japan. And we also saw from China new yuan loans actually dropping by 14% in October, which is of a concern. Our market down by 0.3% and the defensive shining.
Look, you heard Michael say their expectations of range trading for our market, 44, 45 and 48, 44, 70, 44, 80. I mean, would you agree? Do you expect us to remain that narrow?
I guess if we have a look at our Australian market, we last peaked for, it looks like perhaps even for the year, on October the 18th. And really earnings season has come to a close for the Australian share market. And we don't expect a whole lot of news to come out on the earnings front from now till the end of the year. There's just over 30 full trading days left till the end of the year. But if we have a look at earnings expectations and how the Australian market has performed, I guess that tells us a lot as well. Often we have a look at the technicals and the charts, but the fundamentals tell us a picture as well. We have a look at the US stock market. We know that this is a year that the US stock market has been doing quite well. In fact, if we have a look at a 5-year chart of the S&P 500 over in the US, this is the 5-year chart, and you can see almost near record highs for the US stock market. But that's for a reason. We saw corporate profits back in June starting to hit all-time record highs for the US. And in fact, over the last 3 years, in terms of quarterly earnings, every single quarter in the past 3 years has seen growth quarter on quarter. So a fantastic result in terms of US earnings. The Australian earnings picture is a little bit different. We've just come to a close for full year earnings here in Australia, and we actually saw a decrease of 2.5%. So on one hand, while the US S&P 500 companies are seeing all-time record highs in terms of corporate earnings this year, the Australian corporate earnings picture is a very different story, where we've seen a decline of just over 2%. And if we have a look at the Australian share market and how it's performed over the last 5 years, you can see that it paints a very different picture. The good news is that analysts are predicting that we'll see around about 8% growth in the current financial year. But of course, we want to see signs of that to flow through. And one of the things we listen very carefully for is AGM comments from there. But unfortunately, this AGM season, a lot of the outlook statements that have come out have been negative. And on a day like this, where we see the likes of Incitec Pivot, QBE Insurance, as well as Orica in for a downgrade, I guess it leads to a bit of concern. So the Australian share market, we've been in this cyclical downward spiral for the last 2 years. We're looking for a bit of improvement in FY13, but we really want some evidence of that to flow through.